We're half an hour away from the opens in Hong Kong, Shenzhen and Shanghai. You're watching The China Show. I'm Annabelle Droulers with David Ingles.
Let's get to your top stories as we wrap up what's been a really hectic trading week. Stocks across the region are under pressure after Wall Street's first retreat in 5 sessions. Traders are now focused on the U.S. jobs reports that could sway the Fed on a potential rate cut this month.
South Korea's president remains silent after his short-lived declaration of martial law ahead of an impeachment vote likely tomorrow. We hear from the opposition leader, Lee Jae-myung.
And China slapping sanctions on 13 U.S. military companies over planned arms sales to Taiwan in a symbolic move that could disrupt their supply chains.
Taking a look at the market action this morning, and really that big focus is coming down to what's happening in Korea. You're seeing that market stabilisation still coming through, and Sherry Ahn, of course, on the ground in Seoul for us today. But we've been hearing from the ruling party's hand just in the last few minutes saying that President Yoon, his duties do need to be suspended soon. So we'll have more on the just ahead. But broadly, the sentiment today is very much focused around this wait and see on US jobs. So the expectation here is that we're going to see hiring set to rebound perhaps in November. Forecasters are looking at the US adding 220,000 jobs after really what was a storm-disrupted October. Ahead of that, it's sort of that wait-and-see mode. You've got US futures as well, fairly steady right now. But let's take a look at what exactly that expectation is if you take a look at the payrolls figure, because it's certainly going to give us more details around where the Fed will go next. If we get that stronger headline US non-farm payroll figure, that's going to be really warmly welcomed by markets, because it could support that theme of normalization rather than a deterioration on the jobs front. So that's the expectations there, and also what happened in the prior month. But also taking a look at what's going to happen with Chinese equities today, because as we've been discussing, Dave, they just have not been catching that mood of exuberance that we had seen early this week in global equities. And again, today, you're looking a little bit weaker ahead of the setup.
Yeah, I mean, we've been stuck in I think a 1,000 point, and it sounds wide, but it's really not when you look at the Hang Seng Index, point range for the last 4 weeks or so. On the CSI 300, though, I think one to watch is that's really been testing the recent downside, so we'll watch it very, very closely. We'll get to some of the items and the agenda for this greater Chinese equity market in just a moment here. Just very quickly, though, the latest here on South Korea, and we do have the figures out of the latest Gallup polls, that the president's support rating, which if my memory serves me correctly, came from 17% prior to this, now down to 16%. It started on Tuesday, so it's also worth mentioning that this might not reflect all the events up until, obviously, this minute of this very fluid story that's taking place, obviously, in South Korea. In fact, the latest here, too, is that Parliament is moving closer to a vote on that impeachment, and the opposition says it may be difficult to get enough support from the ruling party at this point in time. You have the Democratic Party leader Lee Jae-myung telling us that the situation remains, as we were just pointing out, in a state of flux.
정치는 결국 궁극적으로 국민이 하게 되는데
Ultimately, politics is done by the people, and even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
And our co-anchor, Sherry Ahn, is in Seoul for us. She's been covering the story. Sherry, get us up to speed. What do I need to know now?
I mean, Dave, it's really interesting that you brought up the Gallup polls on the approval rate of President Yoon Suk-yeol at 16%, perhaps not fully reflecting the latest when it comes to the martial law. But it suffices to say that he's a deeply unpopular president, but with still a solid conservative base. I'm here in Gwanghwamun, where protesters have been out in force all week. Just early in the morning, sub-zero temperatures, but we still have protesters coming out demanding that President Yoon Suk-yeol be ousted. But at the same time, there are also protesters who want to keep the president in power. So you can see how divided this nation is. So we're trying to figure out right now what the ruling party will do. Already the opposition leader Lee Jae-myung telling me that he will continue his efforts to impeach the president. Whether that vote passes this Saturday, that it looks like could come as early as 5 p.m. on Saturday. Whether or not the ruling party will actually oppose the impeachment, which was the early party stance, is a key question, because we just heard from the People Power Party leader Han Dong-hoon saying that he believes the president should be suspended from duty quickly because keeping him in office risks putting the people in danger. A very difficult situation for him because he does not want to trigger early elections. That would really lead to a hammering of his party. And remember the trauma from 2016-2017 when the ruling party really suffered after the impeachment of Park Geun-hye.
Yeah, Sherry, actually picking up on what Han has said, because we also heard that he confirmed from credible evidence that Yoon ordered an arrest of key politicians on the night of declaring martial law decree. How firmly do you think people's minds or politicians' minds are made up in the way that they want to vote on Saturday?
Right now, we're hearing from Yonhap, for example, saying that at least there's one ruling party lawmaker that will vote to impeach the president. But the opposition really needs 8 ruling party lawmakers to vote in favor of this impeachment bill. When I was speaking to Lee Jae-myung just yesterday, it seemed that he thought it was difficult to get enough support for this vote at least. I can bet that right now there's a lot of negotiation going behind the scenes to try to get that vote. But no matter what happens right now and on this weekend, Lee seemed determined to oust the president. We know that he's been plagued by many different scandals. So this is not only the impeachment bill that will be voted on. We're talking about also a separate bill in order to investigate the First Lady that will be also voted on this Saturday. So many things happening at the same time. But what is for certain right now is that President Yoon remains very isolated, and really his grasp on power seems to be now diminishing, with even his own party really turning against him and changing their stance. Of course, we'll continue to watch if they actually oppose that impeachment bill.
Sherry, on our co-anchor there in Seoul for us covering the story. Let's have a look at the Chinese story and going into the last session of the week where, frankly, when you look at markets, nothing much has happened. We've been stuck in a range. There's a 30-year bond auction today. Possibly 38.94 is the next support level if we do see some downside on the CSI 300 today. Crypto stocks in focus. We did have quite some sizable moves in Bitcoin, I would say about 1 or 2 hours back. And then we had the breaking news here out of the U.S., and let me just bring that up here on my screens in case you missed that Donald Trump has named David O. Sachs as the White House AI and crypto czar. So just keep that in mind. We're not really seeing markets react to that, but obviously you had a pretty big move post the SEC name coming through yesterday. As far as data goes, nothing much there. And, of course, a pullback we're seeing recently in things like iron ore and steel prices. Watch it closely as we get underway, of course, this Friday here. Belle.
Yeah, and also taking a look at what's happening in local media, Chinese domestic media, given that was really a market driver yesterday. Xinhua is actually releasing the third part of a series of articles on the economy, this one focusing on the challenges facing businesses. The article cites insufficient domestic demand and the shift from old to new growth drivers. It says those difficulties mean companies face the need to compete on innovation. And while touting the government stimulus measures and the party's commitment to support firms.
Yeah, but the story, or the top story at least here across the front pages today, is President Xi Jinping's message to the PLA where he called for strengthening the military's information support force. Xi told troops that the system has a crucial role in modern warfare and should help support combat readiness.
All right, staying on geopolitics, because China's imposed sanctions on 13 U.S. military companies, mostly related to drone manufacturing, and that's in retaliation for U.S. arms sales to Taiwan. Let's get more on this now, bringing our Chief North Asia correspondent, Stephen Engel. And Just bring us up to speed on this, because we're certainly tracking this as sort of a key sector that's developing that relationship between the US and Taiwan and sort of countering China's dominance in this space.
Yeah. First of all, if we pull back a little bit, of course, this is another way Beijing is trying to find to retaliate against some of the actions, not only the increased entity list from the Biden administration, but the threats of tariffs, obviously, that are coming from the incoming President-elect Donald Trump. That being said, the narrative is about Taiwan on this particular sanctions. 13 companies, U.S. military companies, most of them drone manufacturers like Kratos Unmanned Aerial Systems, Shield AI, also Brink Drones among those 13. And essentially, many of these companies and their representatives were also part of this U.S. delegation that went to Taiwan in September. So there is a direct correlation, obviously, to Taiwan. Essentially, China's foreign ministry is saying the assets of these firms have been frozen. No China-based entities can transact or work with them. Also, 6 senior executives from these companies will additionally be subject to sanctions. We don't know what those are or how enforceable they are. This is a highly symbolic move, since these companies don't have a lot of business in China except for the supply chain. And we've had reports in the past when these kind of companies have been sanctioned, there are supply chain snarls that they'll have to work around. But again, it's in addition to what we saw China do, I think it was about a week ago, when they added these, complete export ban on some key rare earths, gallium, germanium, antimony, and others. So yes, this is ramping up.
You mentioned workaround, and just to use that phrase on some of the Huawei loopholes that this GOP panel found, and well, what did they find, and might that be an indication of something that they could plug when Donald Trump comes in?
Yeah, so this was in a letter to Gina Raimondo, the U.S. Commerce Secretary, from John Molinar, who's essentially, he's on obviously a key China committee in the House. So his voice carries great weight. He essentially says, in many ways, he supports the increased curbs on chip-making tools to China. However, he said there's a number of different loopholes. We mentioned Huawei as one. Semiconductor Manufacturing International, SMIC, is the chip-making partner, if you will, of Huawei. So he basically outlined a number of loopholes where these restrictions from the Biden administration are imposed differently on different areas of, say, for example, Huawei's supply chain, and that there could be loopholes. And he also criticized CXMT. Essentially, that's the big high-bandwidth memory chip maker in China, which would compete against the HBM chips that are being made by Micron Technologies of Idaho, which goes into those AI accelerators of NVIDIA. So CXMT is China's biggest competitor on that front. And of course, high bandwidth memory was part of the latest, sanctions or curbs entity list from the Biden administration. But it was not singled out in this latest round of moves by the Biden administration. So he essentially criticized, why would you do all this and not put CXMT on the list? That is not necessarily answered. The bottom line here is Molinar is asking the Commerce Department to hold all documents and all communications related to these latest chip curbs for review by the incoming Trump administration, an obvious signal that Trump is going to take this very seriously and possibly be even tougher on China on these chip curbs.
Yes, possible amendments there, Steve. Thank you so much. Stephen Engel, our Chief North Asia correspondent. Some breaking news now out of South Korea. Yonhap News reporting, and on this emergency, on this impeachment bill, we were trying to figure out whether we will get more support from the ruling party. There will be an emergency meeting that will be held 11 a.m. local time, so that's in about 3 hours from now, to discuss the Yoon impeachment bill. So it's too early to speculate what they're going to be, well, what the outcomes will be, but we do know, of course, that all roads will lead to that vote, of course, and the question is whether or not the current sitting president will be able to survive this impeachment vote here, Bill.
Yeah, that's right. And 11 a.m. local time is 10 a.m. for us.
Oh, okay.
So just in about 45 minutes from now. And we have been hearing from Han, the ruling party leader, this morning, saying that Yoon in office is putting people in danger. So clearly a very fast-moving situation. We're going to get more on that ahead because we're going to be talking that market reaction with Nomura ahead of key jobs figures that traders are also looking at very closely. We'll get the latest on views with trading in France and the EU on the political crisis there. So really a lot of different things to be discussing. Gareth Nicholson is joining us next as we count down to the open of Chinese markets as well. This is The China Show.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labor market.
The November jobs report, today on Bloomberg.
Right, welcome back. It's Jobs Day in the U.S., as we were just pointing out there. And the question really now is there really strong consensus around, I mean, yes, 220,000 is the median. Bring out your statistics 101, though. There's median, there's mode, and there's mean. And there's 6 modes, 6 different figures that have each 6 economists backing that one. So in other words, there's a lack of consensus out there on really what this jobs report might look like, although, of course, the bearing could be what the Fed does, of course, next week there, Bill.
Yeah, it's certainly going to be sort of helping really to shape the direction of where we go with rates next year. And, of course, if we do get that stronger headline reading, it could be something that's welcomed warmly by markets, but something to be tracking very closely with that due out later. And also we'll get that instant Fed reaction. We were talking about it earlier. Just the number of speakers we're going to be hearing from over the next few hours that are going to be sort of from the most hawkish to the most dovish on the spectrum and also could give us that guidance around where we go with rates.
Yeah, Bauman, Goolsbee, Hammack, and Daly. Let's bring in Gareth Nicholson, CIO and head of discretionary PM at Nomura. Gareth, good morning. I'll get straight to it. You guys don't think they're going to cut next week?
No, we don't. And we think the jobs data is going to be, you know, a bit of Goldilocks, which is great. I mean, investors want Goldilocks. We like that. We don't want it too hot. We don't want it too cold. We don't want it too predictable. There's no risk. We don't want it too unpredictable. There's too much fear. We're going to get a 200-odd, job number, which will suggest to us that the Fed thinks the market is strong enough to be patient. They're going to wait to see a little bit more reaction from the new president coming in. They will keep their options open. That's constructive for equity markets. That's status quo. We think this is it's going to be a decent print for markets to continue the momentum.
So if we don't get that cut then later this month, what's your expectations around 2025 then? We still kind of stay high for longer?
We're going to remain higher than we have been for the last few years, for sure. We see 2 cuts for next year. We believe that gives the Fed the optionality that if some of the policy is a lot more inflationary than maybe expected, they can react. If it's not as much, then they can look to normalize to a terminal rate, which is more acceptable. And with regards to that, that's why we're seeing probably 2 cuts for the whole of 2025 in the US, unlike places like Europe where we expect more.
Gareth, on that point, I think we're headed for another record year for the S&P, just in terms of the actual level and the number of times we've been, clocking in new highs. Why even bother looking anywhere else, to be honest, Gareth?
David, it's a great question, and some question that I suppose investors have been asking for a number of years, right? You could have bought tech a while ago, close your eyes, and be pretty happy. But as investors, we've got to think about where's this predictable income going to come from. We know that tech is part of our daily lives, so tech, S&P will continue to be a big driver of performance going forward. It's not going to disappear. But at these kind of levels, is there a probability that we could see a turnaround in growth? Is there a probability that tech is just overdone? Yes. It's low. It's more like a grey swan than a black swan. But there is this risk. So we do need to look to diversify. We do need to look at where there's other avenues of growth, just in case. Maybe not the majority of the portfolio, but definitely looking to move some out into areas that are going to give you growth, are going to give you also predictable income.
So what does that? What gives you growth with predictable income? Where else are you looking at?
Well, there's a number of different ways, but I can think two offhand. One would be, and they're both actually reliant on a lot to do with the new administration coming in. One would be the art of the deal, would be we know that in the Trump era we're going to see more deal making. We think this is going to be interesting, particularly for the private equity market, and particularly in the secondaries. Secondaries have a little bit more visibility of the deals. They're looking at the last stretch of the race, and we think that's going to give you some more predictable growth. We also like, even though there's a lot of shifting with policy narrative, we like things like long-term infrastructure, private infrastructure, looking at decarbonization, digitalization, deglobalization. These things are not going to get affected by 4 years. They're 30-year projects. So again, those are nice, predictable incomes, low single digits, low double digits, high single digits. That's a comfortable income at the moment.
Yeah, Gareth, that's part of your almost 100-page report on the stuff to look out for next year. That's almost 1 page for every 3 days of 2025, which I think we'll unpack a bit later on. Just very quickly, though, I want to ask you about Korea. The notion, certainly, when you look at markets, which really have been stable, to be fair, compared to where we were right before this, the whole drama, is the Value Up program in Korea might be at risk. Is that something I should be worried about?
Yeah, Korea, we didn't expect what's happened recently, but we have been underweight both the bonds and the equities. The bonds because they've just been trading so incredibly tight, particularly the dollar bonds. The equity because of the tariff fears, because of some of the valuation, because some of the sectors that, majority of the index is in, we haven't really seen the value there. This has really shaken sentiment, shaken confidence. We're not going to see the same sort of tourism, same sort of support for a little while. So this gets our focus back on the space. Once we see a little bit more predictability of where it's going, I think the valuations will be more compelling. But at the moment, this is a wait and see. This is not an area where we would diversify out of the US, for instance, or Japan, or even Singapore to go into Korea just yet with regards to equities.
A crash in NVIDIA is one of your Grey Swan events to look ahead to. I'm just teasing our guests and our viewers right now. Gareth Nicholson will be rejoining us to talk us through their Grey Swan list to watch out for next year. Going into the open and final session of the week, Hang Seng Index 19.6, A50 futures flat. The opening bell 6 minutes away. You're watching The China Show.
All right, taking a look at some of the stocks we're tracking this morning. Well, the big news is that President-elect Donald Trump has just named David Oliver Sacks as the White House AI and crypto czar. Now, this follows, of course, the appointment of Paul Atkins yesterday as the SEC chief. And he's someone who's seeing as both really supportive of the crypto sector. You're seeing Bitcoin just retreating back, but yesterday was that big news, 100K, Dave. Yeah,
one other thing very, very quickly here. Ping An Health, special dividend. And hence the stock is reflecting that dividend. We're down about 60%. That said, it's a special dividend of $9.07. The open is next. This is Bloomberg.
Welcome back. You're watching The China Show. We're counting down to the open of markets in Hong Kong and mainland China this morning. And really, if you want to think about the sort of sentiment or the mood in markets today, it's still that wait and see. Yes, you've got that event risk around what's happening in Korea, what's happening in France, but also there's that uncertainty ahead of the key US jobs report due later Friday and what that signals for the Fed, Dave.
Yeah, and I imagine, just judging by what the conversations we've had this week, is the Fed decision base case is still a cut, but we might be sleeping on the risk that they might not actually move, right? So Gareth Nicholson out of Nomura just flagged that risk for us a couple of minutes ago. He rejoins us in a couple of minutes. The other thing I'd point out that we've noticed this week when you look at the macro picture is I've counted at least 3 or 4 analysts that have told us in the last 3 days alone, when you look at these markets opening up, that inflation in the U.S. actually might pick up later next year. So something to consider as we look ahead to 2025. And given how, I guess, waiting for a catalyst is the sort of narrative as far as these Chinese markets go, you look at 2025, that's perhaps the next thing to watch out for. Some decent, modest gains across some of the big stocks here onshore as we open up about a 10 to 1%. Again, very, very tight range. Recently has been testing lows on the CSI 300. That's the level to watch, 38.94, which is about, 30 points north or south of where we are right now. 30-year yield 215, just to flag as well. We have a 30-year bond auction today, north of $50 billion being auctioned out today. And just this pullback we're still seeing in things like iron ore, for example, and rebar futures, down about 1.2, give or take about 1% on both. The open in Hong Kong. Let's have a look at that, please. We have Forex reserves, I believe, coming out today as far as data goes. Hang Seng Index, 0.5%. We've been stuck in this range for about 4 weeks now. So by the end of the day, if we do remain between 19 and 20,000, that's now 4 straight weeks. That has remained the case. Broadly, as far as the dollar and dollar China goes, we are on track for a second week of weakness in the U.S. dollar. Although incrementally you do take stock, and hence we're trading at 106, say, on a dollar index, 727 right now on dollar China. And I guess, Belle, the question is right now, what does next year look like? What are things that we know to consider? What are the things that we don't know that we should be keeping an eye on, I guess, as well?
You're teasing not only the black swan, you're talking about the grey swans, I think, Dave, here.
Yeah.
Well, still with us is Gareth Nicholson, CIO and Head of Discretionary Portfolio Management at Nomura. So, Gareth, tell us exactly that. What are the things that we maybe aren't expecting too much for Chinese equities for next year?
Well, thank you, Annabelle. I think, like you said, it's not a black swan event where it's highly unpredictable, and it's so unpredictable. And yes, it will be impactful, but because it's so unpredictable, difficult to factor into your portfolio. We're thinking practically what could happen, low probability that we want to consider. It's like having a full health check in your 20s or 30s or even 40s where you are still healthy, but you want to look out for potential worries. And this is what we're thinking, particularly around spaces like US tech, where the body is functioning very, very well, but if you eat too much meat, potentially look at taking those small dose cholesterol pills. Look at low cost options on volatility. If you're holding a big percentage in US tech growth, look at ways of diversifying into other growth areas. China has been a tactical growth area for us. We've been very much in and out as the sentiment is slowly building up. It is not an area that we are moving the tanker, which takes a long time to move. This is much more nimble action. So it is really about finding space where you can protect for the uncertainty that has a low probability, but still a chance. Yeah,
Gareth, it's amazing, this list, and I think we're going to show it in a moment again, just so our viewers can see it again. Just to maybe borrow your health assessment analogy there, if any of these things happen, it's almost, I would imagine, would feel like a colonoscopy without anesthetics. To take it for many, an NVIDIA crash, U.S. 10-year yield north of 6%. Do you see anything on the horizon? And I want to focus in on the U.S. 10-year above 6% that could actually take us there.
Be honest, I see very little that is going to push this grey swan event on any of these. Potentially the carry trade unwind 2.0 for the yen with interest rates, but 10-year above 6% is definitely not our base case. This would need a lot of inflationary pressure to come through, would need a lot of Trump policy and other policy to play. It doesn't mean that we don't consider that inflation will be higher, and we want to look at instruments which will do well in a higher for longer environment. And this just sets the boundaries. And once you have the boundaries, you can work within the space and you can really look at where the portfolio is. For instance, 10-year, our view is to end the year at about 4.5, 4.75. That's 2025. So there is not too much movement. It may be quite a roller coaster ride, but we don't see a huge movement in the 10-year treasuries by the end of 2025, given we're only seeing two rate cuts for the whole year, and the curve still needs to normalize and build in some real term premium. And that is the difference between the front end and the longer end. You want to get paid a little bit more for holding longer duration than the short. So this is really about looking to see how we can build in more predictability into our outlook in 2025. And understanding the grey swans enables us to really direct where we want to focus our high conviction, things like private equity and secondaries, things like, private credit, infrastructure, Japan, even India. These are things where we have a much better predictability to them and a much higher conviction for us looking at 2025.
Gareth, I think we can show the graphic again. Actually, on the list, the one that stands out to me as being one that's maybe more likely as a grey swan event is that China stimulus and the risk that it disappoints. Because yesterday we had in local media Xinhua, their editorial or their statement sort of telling us that maybe the growth near 5% is enough and that investors maybe should temper their expectations around what we actually get announced next year. So what's your view on that one?
Well, you're talking particularly around China stimulus. As alluded to earlier on, we do believe that China is pushing in the right direction. The stimulus is coming. Some are expecting or hoping for more of a torpedo, and it seems to be a much more slower pace than maybe the markets expect, or at least have felt over the last few years of huge QE infusions. We do believe it's building up and it is getting stronger, but it's going to take a while to get that confidence back, particularly the local confidence. As soon as we start seeing more Chinese investors buy Chinese stocks, then you're going to see international investors feel that there is a flaw and there's going to be that big shift. It's not just going to be more of a tactical shift. So we think the stimulus is going in the right direction. Do we think there is going to be a huge stimulus? That would be a grey swan, something that there is a probability, but we can't see the catalyst clearly of what will shift for a huge stimulus.
Gareth, something also that I've noticed is fairly common across this outlook for next year is this. It seems that you're advocating more exposure to private markets and alternatives. Do you expect that structurally to continue those flows out of public markets next year? And why is that valuable for wealthy investors right now, to simply look for something uncorrelated?
David, I think you answered the question for me. It's the uncorrelation, but still giving those returns. It's a part of the portfolio that a lot of wealth clients, particularly in Asia, are underexposed to. So it gives an opportunity to fill the gap, and whilst offering risk return that are very, very interesting. Private equity gives you the high return, so you're compensated for the risk. Other things like the more private income, even hedge funds, offer you a little bit more stability in uncertain environments. And really, there is a lot of potential for unpredictability in 2025, and we want to start building in resilience, and that's our outlook entire thesis is building resilience for our clients so that we can continue a great 2024 and enjoy 2025.
Gareth, final question on that too. How receptive are your clients, and not to give anything specific, of course, but given the flows already into private markets at current levels, how much more receptive are wealthy investors right now to add more mojo in that space?
I think there's still a lot of mojo in that space. We're seeing a lot of demand. We're seeing a lot of interest in the space, particularly in Asia. If you think US has been very heavy in the space for a number of years, Europe as well. Asia has been growing, and we still think there's growth in the space. It's one of the high conviction areas that really align with clients' needs and building stronger portfolios.
Gareth, if we don't speak to you again, Happy New Year. It's always, obviously, we value, of course, the insights. Hi to your team. Fantastic report, by the way, I have to say. CIO and Head of Discretionary Portfolio Management there at Nomura. Right, just ahead here in shows, we will have a look at the economic and also the market impact of this ongoing drama, turmoil that's gripping South Korea. Our exclusive with the Finance Minister is coming up next. This is Bloomberg. Right, welcome back to the show. I mean, what a almost an alignment, editorial alignment, as we like to call it here. So, given events this week, it's worth noting that Korean markets, not this week, have really pulled back over the last few months or so. I mean, Samsung, for example, is down, I think, 30%, if not from the peak or this year so far. So a couple of strands, right? So South Korea is actually one of the four world's worst performing markets, number one. Within the Asia Pacific, it's really the worst, whether you go from the purely large caps of the Kospi 200 or the 50, all the way down to the cost stack index. And in fact, our guys at Bloomberg Intelligence have put out a fantastic report on this too, talking about, you know, how the corporate value up program might be at risk and how we need to rethink that, if any. And also, this is something I just learned today, that 60% of the market is actually controlled by 5 families in South Korea.
Well, that's the chaebol discount, right?
Yeah.
The concern that you aren't really getting efficient corporate governance. And as you said, that's really what's at risk now, that corporate governance, that value-up program. What's it going to look like if we see a new president possibly in place? But, of course, we've got the ruling party emergency meeting in just about under 20 minutes from now, so something to be tracking very closely. But in the meantime, we've also been hearing from South Korea's finance minister, and he's downplaying the impact of this week's bungled martial law decree on the economy and also on markets. Choi Sang-mok told us exclusively that fears about the country sliding into a recession in 2025 are excessive.
최근에 그 비상계엄 조치가 이제 헌법과 법률에 따라서 신속히 해제됐기 때문에
The recent emergency measures were quickly lifted in accordance with the law, so I think the impact on the market was very limited. I'm not sure if that's the right answer to the question, but I think that South Korea is now operating a system that is better than the market safety measures. That system is working well, and as a result of its good performance, I think we are now finding some degree of market stability. In the future, if we face even more uncertainty, systems related to the market will work well, and we will be able to respond because we are ready. If there is any short-term volatility, the Bank of Korea and the financial authorities will work together to provide unlimited liquidity to the market. We will also take measures in this regard. Our basic direction has been to take various measures to stabilize the markets as much as possible. So once that was done, the Bank of Korea and the Financial Services Commission announced specific measures. In the future, if such volatility increases, we will take similar or more drastic measures when necessary.
I had a chance to sit down with the main opposition leader, Lee Jae-myung, very recently, and he mentioned how the instability that we're seeing in the markets right now is all to do with the administration, that once the president is removed, things would calm down, the foreign investors would come back. How do you respond to that?
글쎄 뭐 정치인이 어떤 말씀하신 거에 대해서 평가하는 건 맞지 않고요.
Well, it's not right for me to evaluate what he said. As far as I know, fundamentals of foreign investors' investment in Korea is affected by the fundamentals of our economy. As I mentioned earlier, because our various systems are working well, the impact on the economy has been very limited and it's well managed. Even in the past, we have seen that the impact of non-economic factors was not a major concern for foreign investors. Rather, their sentiment has been swayed by fundamentals of our economy. The Korean government is stepping up its effort to strengthen the fundamentals of our economy. It is stepping up these efforts even further, and I believe this is a way to encourage foreign investors to invest in Korea a little more.
In the immediate aftermath of the martial law declaration, the lifting, and of course potential impeachment proceedings, how are you planning to restore investor confidence, not only in the Korean markets, but in the Korean economy and fundamentals?
네, 아까 말씀드린 것처럼 이렇게 비경제적인 요인에 의한 어떤 충격이나 불확실성은 과거에
As I mentioned earlier, we have seen such shocks and uncertainties caused by non-economic factors in the past, but they were temporary and limited. We believe that the Korean system is working well in these areas. but the basic trust of foreign investors in the Korean economy is actually based on concerns that the Korean economy's potential growth rate and growth momentum are shrinking. So the Korean government is making efforts to increase the robustness of the Korean economy, innovation, and social mobility through the creation of a blueprint. And recently, due to uncertainties in global trade, we are making efforts to strengthen the competitiveness of some industries and others that are less competitive among the more traditional industries.
How are you preparing for the Trump administration?
지금 한 두 가지 차원에서 접근을 하고 있는데 하나는
We are approaching this from two different angles. One is through our efforts in trade diplomacy. The U.S.-Korea alliance is strong, so we are making similar efforts as we did when the Biden administration was inaugurated. This is to minimize this uncertainty that our companies and industries face by strengthening the negotiations between government in parallel with the inauguration of the new administration. The second is to take this as an opportunity to strengthen our competitiveness in key industries such as semiconductors and automobiles, as well as traditional industries such as petrochemicals and steel. We're preparing for crisis factors in each sector. We're also preparing measures to maximize the opportunities in areas where there are opportunities, and we are in communication with companies and industries.
Given the uncertainty about potential global tariffs, not to mention the political uncertainty in South Korea, what are the chances that we might fall into a recession next year?
지금 리세션은 얘기하셨는데 그 내년도에 경기 침체 우려가 있다는 말씀은 너무 과도한 우려라고 생각이 들고요.
I think it is too excessive to say that there is a risk of recession next year. Korea's growth rate next year, projected by the International Monetary Fund or the Bank of Korea, is at or near its potential level. Therefore, we will respond to uncertainties by combining appropriate macroeconomic and macro policies. We will also make efforts to strengthen policies that target more vulnerable groups.
And that was the finance minister in South Korea speaking with Sherry, of course, exclusively. Right, we'll continue to be on top of the story, of course, but some other stories that we're tracking at this point in time, just to tell you about. A U.S. federal judge has rejected Boeing's plea deal that could have allowed the company to avoid this criminal prosecution over two fatal 737 MAX crashes. The judge sided with family members of crash victims, calling some of the deal's provisions inappropriate and against the public interest. The decision may lead to a revised plea agreement. Now, Syria's army says it has retreated from the city of Hama as rebel forces advance, increasing the threats to President Bashar al-Assad's hold in power. Now, Hama lies about halfway between Damascus and Aleppo, which opposition fighters captured last week in a surprise attack. The rebels are led by Hayat Tahrir al-Sham, a former al-Qaeda affiliate that's designated a terrorist organization by the U.S. and others. Now, Elon Musk has met with lawmakers on Capitol Hill to promote his effort to cut at least $2 trillion from the U.S. federal budget. Musk and his partner in the so-called the Department of Government Efficiency, Vivek Ramaswamy, discussed ideas such as ending work-from-home options for government workers. Now, their effort faces challenges, including possible bipartisan pushback on Capitol Hill. Plenty more ahead. This is Bloomberg. Right, welcome back to shows. Another day of declines across the South Korean markets. A milestone, in fact, just hit a couple of minutes back, 24.13. The Kospi's now at a year-to-date low.
Yeah, not a great milestone, but it is certainly one that's being marked. And for people that were sort of saying that this could be contained, I think it was sort of on the basis that the political turmoil would also be contained. But if anything, it seems to be heating up. We've got the ruling party that's holding an emergency meeting just in about 10 minutes from now, so that's going to kick off. And we know there's been sort of a sentiment shift because the ruler of that, or the leader of that, Han, has indicated that maybe something was going on there where President Yoon was also trying to essentially arrest people under that military decree. So it seems like he's had a bit of a sentiment tone shift just in the last few hours.
Yeah, this party meeting that Bella is talking about is the party meeting that took place, well, today, so a couple of hours back, I understand. And it appears that he is now backing a suspension of the president from office quickly, and that's something that could then make an impeachment motion, which the opposition leader had told Sherry, of course, early on was unlikely, more likely to pass over the weekend. And we'll get more information on that, as Bill was pointing out. Top of the next hour, we have this emergency meeting taking place.
Yeah, and just to add some more context on that, the leader that we're talking about here, Han Dong-hoon, said that he's got credible evidence that Yoon ordered the arrest of key politicians on the night of declaring that martial law decree. So something that to track there, but also some of the movies we're watching in the session today. Hon Hai is one of those, and this is, of course, shifting focus to Taiwan here. But one of the reasons Korean equities have been so weak is that perception they're getting left behind in the AI race. And Hon Hai, of course, is one of the ones that's standing out, given it's got such a large AI software business. The stock, though, is just a little bit higher because we've seen it having sort of single-digit sales growth, and that is the concern. This is a major iPhone assembler. The slowdown in the Apple-connected part of the business, is that going to be offset enough by what it does in terms of the AI infrastructure? So that has come through, 3% sales growth.
Yeah, and now just back to the Chinese market story. So the third edition, I believe, of the Xinhua pieces that have come out this week, and the third installment, to be more specific here, on the economy. And today, we're looking at this magnifying glass that's been refocused back to consumption and the macro challenges. And the corporate sector does face challenges in flagging consumer demand, one which may mean that policy orientation might be geared towards that. As I guess when you look at state media and the tone that we've come so far this week, managing expectations as to the scale of what might come as far as fiscal stimulus is concerned, but certainly none less urgent and targeted as far as what the consumer needs. And I think later on we'll be joined by Becky out of Standard Chartered on her expectations around rates, FX, and all things in between as we look ahead to 2025 and the policy offset. And in fact, just to make note of this too, that Standard Chartered is slightly more on the bullish side as far as the Chinese currency is concerned. So we'll ask Becky why that's so. And of course, at the top of the next hour on the China Show, we'll be looking at the latest out of South Korea, this ever-fluid story. So stay with us. Plenty more ahead, suffice to say. This is Bloomberg.
Welcome back to the China Show. Taking a look at how the CSI 300 is faring half an hour into the session. We're actually moving a little bit high, so snapping a two-day drop. Some bad news, though. Actually, I was just reading it in the break here. Morgan Stanley's Laura Wang is saying, and she's the chief China equity strategist at the firm, but saying that we should expect more earnings disappointments to come. We've had 13 straight quarters of earnings misses. They're saying perhaps at least another 2, given the policy measures we've had so far have been insufficient to reverse that deflationary trend.
Yep, we got to give it to the team at Morgan Stanley for keeping us grounded, really. But of course, that's why we love Laura Wang and her team, of course. Yeah, so come on shows when you have time. We want to talk more about this. The story this week, and really back to the here and now, and we were thinking, and hopefully I'm wrong in my suspicions here, that the troubles around the stock market in Korea have been ring-fenced past tense. What's happening right now as we look ahead to the weekend, the event risk has suddenly gone up a couple of notches here. So the South Korean market, which is the Kospi you see on your screens, first row, second one from the left, we're down about 1.3% on the Kospi index. 700 stocks out of the give or take, I would say 850 stocks in that index are actually down. So it's a broad-based decline. 18% down on the likes of Mirai Corp, for example, 19% down. So that's enough to take us to the lowest level of the year on the Kospi index, I think, which shows you, which is coming up on your screens, 2410 right now. What are you seeing?
Well, I'm actually taking a look at what the Kospi is doing there. Yeah, exactly, 2410. But this is a year-to-date low for the index. And I think what's really interesting and something to track is when do we start to hear from regulators and financial officials? Because we've actually had some great interviews on Bloomberg television. We've had exclusives with the Finance Minister, with the BOK governor. And they're really pledging that stability and saying that this is going to be something that, as you said, will be contained. But we've also got the South Korea ruling party that is supposed to be meeting in this hour. And really the key question, of course, is what do they signal about the outlook for President Yoon himself? So let's get more with Sang-mi Cha. She joins us now from Seoul. And talk to us, Sang-mi, what do we expect to be happening in this hour?
Yeah, so things are changing very rapidly over here in Seoul. The opposition party was pushing for the impeachment vote for around 7 p.m. tomorrow. Then this morning, we heard from the ruling party leader, Han Dong-un, that he confirmed from credible sources that President Yoon Suk-yeol ordered the arrest of key politicians on the night he declared martial law earlier this week. And that keeping the president in office risks putting the nation's people in danger. Han said this at a party briefing, party meeting this morning. And that's a surprise shift we are seeing here, given that the President Yoon's Conservative Party line was not to impeach the top leader until very early this morning. And now this means we are one step closer for the impeachment motion to pass. The ruling party is now holding an emergency meeting as we speak. And it's important because to pass an impeachment motion, a 2/3 majority of the parliament is required, meaning that 200 members of the 300-member National Assembly must vote in favor. And given that the opposition party has 192 seats here, a minimum of 8 defections from the ruling party would be required to pass. And earlier, yesterday, when we were talking to the main opposition party leader, Lee Jae-myung, he did tell us that it could be quite difficult for these lawmakers from ruling party to, even if they do have that intention to join the opposition, to actually distance themselves from the unpopular leader. So now things are evolving very rapidly, and it could change any moment.
Yeah, Sang-mi, I'm wondering, David here, if you could talk a little bit more about that. Because it's certainly counterintuitive that members of the ruling party, from a political strategy perspective, might choose not to support the impeachment for now. Just lay that case out for us and why that might make political sense at this point in time.
Yeah, so it's very understandable that the members of the ruling party does not really want to impeach their president, because the president actually belongs to that party, and the ruling party is also pushing for its party leader Han Dong-un to be the next contender if the impeachment does go through, and then if something were to happen and then the top leader has to change. But kind of gearing our focus a little bit back to impeachment motion, when and if it does pass, Yoon would be suspended from his duty immediately, and an interim president would be appointed. And South Korea's constitution says the prime minister is to serve as acting president in that case. And if not, then it passes on to the cabinet members in that order. And at this point, the case would then go to the Constitutional Court to make a final decision, and a process that could take several months. And we remember back in President Park Geun-hye, the one who was actually impeached in 2017, there's no set schedule. But for her, as a reference, once the impeachment took place, it took about 2 months until the new president came into power. And that whole impeachment process took about 3 months. So altogether, it was 5 months of that vacuum that we were seeing. So this will be something that could happen again if this happens. And if the court rules in favor of impeachment, an early election would follow soon after.
Sang-mok, talk to us about the conversations you're having with traders and investors and whether their sentiment is changing at all, because as we've been saying earlier this week, it seemed like it could be contained and we saw that element of stability. But right now we're seeing volatility for the Kospi rising to a 1-month high, and we certainly are seeing that market reaction maybe spreading a little bit.
Yeah, that's right. So the Kospi actually opened 0.5% higher this morning. And so we were thinking that this would be the first gain since the martial law was declared earlier this week. But now we're seeing that the benchmark is dropping to 1.8%, falling for that third day after this media reports that there's like potential second martial law in place. These are, again, just from local media reports. So we do not know the validity of these reports. But the gauge is erasing its earlier gains. And we're seeing similar trend in Korean won as well. But you're right. So a lot of the traders are mixed on this market, in the picture right now. Many are saying that this is the time to buy the dip, given that there's the cheaper valuation for Korean stocks. This is exactly the time to add more of these attractive Korean stocks, because soon after, if there's any impeachment, soon after it will come back to its normal business as usual, given that Korea has very good structure in terms of politics and economy, and all the economic authorities are doing their best to actually normalize and stabilize the financial and economic situation on the ground. But there are also other parts of the investors who are saying this is not the time to touch Korean stocks or Korean assets, and actually they're reallocating some of their investment into the country.
Sang-mok, fantastic reporting. Sang-mok Chai in Seoul for us. Just on the buy and dip mention that Sang-mok just did, I just had a very brief look, and I think I managed to just toggle the data enough here. So Samsung Electronics is actually on track for its worst year this century, pretty much. Well, going back to year 2000. Yeah, it's the worst year for Samsung, down about 31% rather, year to date. Yeah, so it's about a third in value lower. Buy the dip? ? Okay. Staying on this, there are growing concerns in Japan about the political crisis in South Korea, with a former Japanese Prime Minister Fumio Kishida exclusively told Bloomberg that the turmoil risks undermining progress in their bilateral relationship. Now, Kishida, who left office, if you recall, back in September, had formed a warm relationship with South Korean President Yoon over frequent meetings.
I think political stability in South Korea is important in order to move the Japan-Korea relationship forward. It seems like the turmoil is continuing right now, but I hope things stabilize as soon as possible. I would like to create an environment in which Japan and Korea can work together on economic, diplomatic, and security issues.
Well, still ahead on the China show, we're previewing today's RBI decision. Hear why most analysts see the central bank standing pat despite a surprise slowdown in growth.
It's Jobs Day, and Bloomberg has the report under surveillance.
Who do you think holds the leverage right now? Employers or employees?
It's more balanced than we've ever seen.
Today, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The labor market weakness we saw in the summer was a head fake.
What raises this question, basically, has the narrative been set?
We are still in the throes of a strong labor market.
The November jobs report, today on Bloomberg.
Breaking news just crossing the terminal. We've got President-elect Trump issuing more nominations this evening, and one of those is the next ambassador to China. So President-elect Trump has just announced that he has nominated former U.S. Senator David Perdue, and he has accepted the appointment as well. So this is someone who's been a Fortune 500 CEO, who President-elect Trump is also really emphasizing his long-standing international business career that was spanned over 40 years. He was, for instance, a senior vice president at Reebok. He later joined Pillowtex. He was the CEO of Dollar General, so has had quite a deep experience in business. He also served in the U.S. Senate from 2015 to 2021. President-elect Trump also saying in his statement that David will bring valuable expertise to help build our relationship with China. So we'll get more details on what that relationship could look like. Certainly there's been a number of appointments so far that tell us that hawkish stance on Beijing is certainly going to be persisting from the Washington side.
Yeah, absolutely. That announcement, as Belle was pointing out, just coming in through in the last few minutes or so. We'll try and get more details on the story and hopefully give you more context over the next couple of minutes or so. In the meantime, there's something else on China today, and quite opportune. This pivot back to China. We have a 30-year bond auction today on your screen that's bid to cover over the last few years or so. So perhaps more importantly here is that demand is expected to remain quite hefty, even with low yields at these levels at, I think, 2.15 on the 30-year yield. 56 billion renminbi is on offer today at a 3% coupon. Let's talk us through the outlook for interest rates, macro, and also the currency, given, to Belle's point, perhaps the wall that's upon us next year in the form of tariffs in China, to China. Becky Liu is head of China macro strategy at Standard Chartered Bank. Nice to see you, Becky.
Good to see you.
Can we start off with the 30-year yield? Do you think things will remain bullish and demand will be still hefty? Even things do look very expensive, I have to say.
Exactly. So we're still looking for China rates to be falling further from here.
Okay.
The clearest implication to China market from Trump's second administration, in our view, would be rates rather than FX. It's pretty clear based on historical experience that trade wars, tariff hikes would lead to lower inflation or deeper deflationary pressure. So based on our calculation, if PPI inflation is going at the current trajectory with some further tariff hikes, it can go back to -5 in sometime in 2025 from currently almost -3%. And this has been the same experience for China during the last period of the trade war, as well as during the US-Japan trade war decades ago.
So just taking a look at the 10-year yield there, for instance, under 2%, where do you see that heading by mid next year?
We are seeing it declining further to around 180 by the end of next year, and the risk is for it to fall even faster than this pace. At this stage, we feel that monetary policy will become more aggressive. So we are still looking for another RRR cut by the end of this year, and we are not completely ruling out the possibility for another rate cut if the Fed continue to cut in December. And into next year, given very high real rate at this stage, which is the highest since 2015, we believe it's time for China to ease monetary policy, including cutting rates more aggressively.
And why do you think that doesn't hit the currency?
At this stage, part of the reason is seasonality. The Chinese exporters are on track to post another record trade surplus this year of about $1 trillion. And they are still very much under-hedged. So towards year-end, a lot of them still need to increase the hedging ratio to reduce the financial reporting uncertainties. But seasonality will again turn negative after the Lunar New Year at the end of the January next year. So we are looking for dollar CNY actually staying very stable or slightly lower at 720 by the end of this year before it moves higher to 735 by mid-2025.
Is dollar yuan the right way you want to look at it, or do you want to really be considering the yuan against sort of the trade-weighted currencies in this region?
we believe the trade-weighted basket become more and more important. Based on our calculation, more than 80% of China's export growth since 2018 are already coming from regions outside of the U.S. as well as U.S. allies. So it's much more important to be competitive against the rest of the world rather than U.S. alone. What's more is that there is no limit for tariff. The more CNY depreciates against the dollar, U.S. can always come back with higher tariff. And from China's perspective, the incremental of external demand will primarily come from the rest of the world outside of the U.S. anyways. So we believe they would focus much more on the currency basket rather than against the dollar alone.
And sort of the other side to that is from an economic perspective. I think you mentioned they might need to find new markets for their exports, and they also might look to revive, is that a right word, dual circulation? Like whatever happened to that exercise?
We believe they have to rely much more on domestic demand when external demand is facing more challenge. The last time around, it was still enough for them to look for new markets outside of the U.S. or the traditional DM markets to look for enough demand, and they have been pretty successful that time around. But this time around, when we look at the Trump administration, the new cabinet, it looks like U.S. demand is going to disappear much faster for Chinese goods. And therefore, no other market would be big enough to offset this kind of losses except for China's own domestic demand. And the dual circulation term was first introduced in May 2020. So meaning that they were already planning to use a stronger domestic demand to offset the decline of external demand back then.
The big difference, though, between 2020 and now is that domestic demand is a lot weaker than it was back then. You know, how much more urgency do you think this gives policymakers? I mean, what more can they introduce is my question, too.
Sure. First, we believe they are in great urgency this time around. So even without additional tariff, we are already seeing a rise of social tension. And that would be the strongest trigger for a stronger response from the policymakers' point of view. In terms of what they can do, they can first beef up social safety net, together with use fiscal policy to increase domestic investment, again, including even infrastructure investment. And they can also step up their support to real estate sector, to domestic consumption, which would be bigger job creators to stabilize the labor market.
All right, that was Becky Liu there, head of China macro strategy at Standard Chartered Bank, and really about that policy reaction dealing with Trump back in the White House. And to that point, just to recap, we've had Trump naming David Perdue as U.S. ambassador to China. So we'll have more details on that just ahead. This is Bloomberg. Well, President-elect Donald Trump has named David Perdue as U.S. ambassador to China. Let's get more on this story from our Chief North Asia correspondent, Stephen Ingles. So, Steve, we're just really trying to wrap our heads around this appointment. What do we know about David Perdue so far? Yeah,
first of all, I think it was a foregone conclusion that Nicholas Burns was going to be on his way out, even though it hadn't been mentioned. Of course, he was Biden's longtime ambassador in Beijing. But David Perdue is a former senator from Georgia. He is actually the cousin of the former two-time governor of Georgia, Sonny Perdue, a wealthy former CEO. He worked at Reebok, Pillowtex, Dollar General Stores. He won his first Senate seat, I believe, in 2014, so 10 years ago, at the young age of 64. So he was a late bloomer to politics, and he was a staunch supporter of Donald Trump in the first term. Actually, he was kind of one of Donald Trump's go-to guys in the Senate during his first term. So perhaps this, as oftentimes these very high-profile diplomatic postings are rewards for loyalty, perhaps that's what this is. Again, he was also the chairman of the Sea Power subcommittee in the Senate. He has been an advocate of smaller government spending, as many Republicans under Trump have been. But he also, given the fact that Georgia has a big population of military personnel, he would like to see more outlays to the military at a time of heightened geopolitical and national security risks. And again, the Sea Power subcommittee, there's a big naval base in the coast of Georgia as well. So again, we're going to have to see how this all plays out. He was also the chairman of the Banking, Housing, and Urban Affairs Subcommittee in the Senate as well.
Interesting. Annabelle just flagged this. I think it's a piece that he himself wrote, and it's not too long ago, actually, September, which is
September of this year.
About 3 months ago.
Yeah.
And let me just read you an excerpt from this, Steve.
Sure.
Through all my activity in China, and just a part of this, right? So context is key. Through all my activity in China and the region, one thing has become painfully clear. The CCP firmly believes its rightful destiny is to reclaim its historical position as a hegemon of the world order and to convert the world to Marxism. Suffice to say, China hawk.
Yeah, I would think so. And also, of course, given he's a military hawk as well. So,
yes.
I mean, Nicholas Burns was no pushover either. I mean, he talked a lot about these kind of things and the threats with the South China Sea and in Taiwan. And again, has been a harsh critic of China's no limits partnership with Russia at a time of the Ukraine war, obviously. So I don't think Beijing's going to get an easy dove coming in as the ambassador. It's an extremely difficult job, obviously, to be the ambassador, the U.S. ambassador to China at this time of increased entity list and export controls and retaliatory export bans in key metals to the United States by China. There's so much pressure in this job. We'll have to see. I mean, he's a veteran of the Senate. He has diplomatic chops, but again, no easy job.
Yeah, the title of that piece from Senator David Perdue himself, Washington Examiner, China's New War, America's Freedom Depends on Confronting the Threats. Stephen Engel, thank you so much, our Chief North Asia correspondent there, with the breaking news in literally in the last 10 minutes or so. Very quickly, Gore-Tech traded in Shenzhen is up about 3%. One stock that we're tracking there, this is this report of a tie-up or cooperation with Meta, saying that the company, Meta is working with the company on headset design and development. That's story number one. Story number two, some of these infrastructure stocks are on the up, on the back, again, of possible government supports, and these tend to be small in sample size as well, and we're just looking at some of these names. China unveiled opinion supporting the construction of new urban infra and building resilient cities. That's according to a document that published by Xinhua. We are getting, and I guess just to take maybe just a small half a step back here, you are getting equity markets on this front, on infra, on the way up. Although broadly this week, last I would say 48 hours or so, we've seen a pullback in things like steel and iron ore prices, maybe along the same lines here. After, I should also mention, iron ore was up successive days, I think maybe 6, 7, even 8 days going into this current 2 or 3 day decline. Belle, you're looking at something here too?
Just keeping in a watch still on what's happening in Korea. We've seen the Kospi reaching a fresh year-to-date low this morning, but hearing from a couple of different lines. The Premier is asking civil workers to do their best at work. That's coming from Yonhap and KBS as well, saying that the JCS says there's no need to worry about a second martial law. That's KBS television citing South Korea's Joint Chiefs of Staff. Some more details just ahead. This is Bloomberg. It's 11:29 a.m. in Tokyo. Japanese traders just about to go on their lunch break, and we're seeing the Nikkei coming under a little bit of pressure this morning, and someone also cleaning the studio.
Yeah. There we go.
Well, I'm glad they wiped it clean for us, because there's certainly a lot to be marking in Japanese stocks this morning. We've seen big moves coming through to the downside, but it's that focus on the Japanese currency and also the JGB 10-year yield, because we're reaching a point that also tells us traders are really agitating for the BOJ to hike, and that's sort of perhaps an expectation that's building given what we had in the wages data this morning. Base pay climbing by a record
2.8%. That's the cash earnings full-time year-on-year sample base case. Base pay. So, this story around wage increases in Japan, and it's incredible how we went from negative 0.2% all the way up to nearly 3% on that as well. That's going into our highlights of the year, of course. Mr. Cleaner Thank you so much, taking us to the cleaners. And it's a reminder, really, that if this carry trade unwinds quite violently, that's the pain trade that cleans out most of the positions that might be positioned for one otherwise. In any case, the read across markets today is, what's the name of that guy, actually? I'm quite curious about. Anyway, hard at work, let's put it that way. What time is it in New York? Almost 10:30 p.m.? Yeah? And I mean, it's just a reminder, viewers, right, that around the clock we maintain...
Oh, it's 9:30 p.m.
Immaculate facilities here at Bloomberg.
Well, I mean,
it's
only the best for our viewers. That's what we can say in aggregate. But of course, it's not just the focus on what's happening in New York or Tokyo this morning.
It's also
spot
needs cleaning, though,
certainly what's happening. It's what's happening in Korea, because we've got possibly that meeting underway with the ruling party. Question marks over the future of President Yoon, and certainly South Korea's opposition leader weighing in on this. He's admitted that it's going to be difficult to get enough support from the ruling party to impeach President Yoon over his decision to declare martial law. But Lee Jae-myung told us that he remains committed to removing the president, even if Yoon survives the initial impeachment vote.
정치는 결국 궁극적으로 국민이 하게 되는데.
Ultimately, politics is done by the people. And even if the result of the vote may go against the will of the people in the current situation, the vote result may change next time if individual members of the parliament are pressured heavily by public opinion. That's what I think.
The martial law declaration really caught international partners by surprise, especially key allies like the United States. How are you going to restore confidence in the relationship with South Korea?
아마 전 세계에서
It is probably a very confusing situation for the rest of the world to see South Korea. Something that couldn't have happened has happened. But it's not a common situation in South Korea, and it's a problem caused by the very special character of a certain individual named Yoon Suk-yeol. It can be seen as a situation where disease penetrated into a healthy, living thing called Korea. Usually, the president mobilizes the military and the police to attempt to destroy the constitutional order and strengthen his power through a de facto coup. But this was thwarted by the people in the National Assembly within a few hours, wasn't it? This shows the healthy state and the true power of Korea. This person, Yoon Suk-yeol, is just a special, exceptional, and temporary phenomenon.
We have seen Japan also play an active role in the trilateral alliance with South Korea and the United States when it comes to pushing back against not only North Korea, but also against China. What will the relationship with Seoul look like under an administration that's led by you?
대한민국은
Korea is a peninsula located between continental powers and maritime powers. In fact, it could be very diplomatically and internationally vulnerable. But on the other hand, it has opportunities at the same time. We cannot continue to be hostile in our relationship with Japan.
The so-called Korea discount has been in place for a long time, even before the Yoon Suk-yeol administration. How do you plan to overcome that, especially when it comes to issues like short-selling bans?
윤석열 대통령 이전에 있었던 코리아 디스카운트는
The Korea discount that existed before President Yoon Suk-yeol was caused by the division of the country and military confrontation. And there was also the abuse of corporate management control system and stock price manipulation. So, we need to improve these things institutionally. The special problems that have risen in the Yoon Suk-yeol administration, the escalation of geopolitical risk, absence of economic and industrial policies. These things will be resolved when the administration ends and the risks that existed before that will be institutionally improved. Short selling is a necessary system. We need to allow it reasonably and fairly within the necessary boundary to make sure that it is not abused. We need it for the benefit of MSCI.
And that was the Korean Democratic Party leader, the opposition, Lee Jae-myung, speaking with us, of course, in Seoul to our Sherry on. Right, from one big story, and let's see what happens if the RBI gives us something more to talk about today. You have a rate decision on deck. Of course, there are certainly conversations around the governor and what's next, or is he going to continue? Now, looking at some of the polls right now, most economists don't think there's anything to talk about as far as a rate cut is concerned. Standing pat, I believe, is the largely consensus right now. Let's bring in our South Asia economy editor, Ruchi Bhatia, joining us from Delhi today. And yeah, just underscore for us that consensus, this expectation that nothing's going to happen today.
Well, one really cannot say that nothing is going to happen, David, today, because this policy is really live for a rate decision. While most people are expecting that Governor Das is going to stand pat today, it is quite likely that he may just go ahead for a rate cut as well. Who knows, really, after the shocker of a GDP number that we saw last week at 5.4%, we saw growth coming in at a 7-quarter low, and that is really raising the stakes and raising, this expectation that perhaps he may look at a rate cut as well. Having said that, one must caution that inflation is still very high, out of the comfort zone of the Reserve Bank of India. Having said that, the calls for rate cuts are growing louder. You had the Finance Minister Nirmala Sitharaman as well as the Trade Minister Piyush Goyal. Both have been calling for rate cuts recently, and there are pain points that are being seen in the economy as well. But as I said, inflation has been a top concern of Governor Das and the entire Monetary Policy Committee just last time in October as well. Despite the stance being changed to neutral, you had one member of the Monetary Policy Committee who had voted for a rate cut, and there is an expectation that more members will tilt in favor of reductions going forward. Also, there is an expectation that the GDP and inflation forecasts that the central bank had given will be revised in this policy. So this policy is live for a lot of action.
What else is going to be really live for action on is what happens with the Governor Das, because his contract expires next week, so he's surely going to be fielding a few questions on that.
Oh, absolutely. Governor Das has had a very successful stint in the last 6 years at the Reserve Bank of India. In fact, by some people, he's seen as one of the best performers. Having said that, the last time Governor Das got an extension in his term, in his tenure, it was announced almost a month in advance, and so far there's been no clarity. So what happens with his tenure? Will there be an extension coming? Will there be a new face, a new governor at the helm at Reserve Bank of India? So all those questions will really play front and center in this policy. One also needs to see that this policy is coming at a time when there will be a lot of changes in the next coming months. The deputy governor's term is coming to an end, and the 3 new monetary policy members are way too new. So there are a lot of moving parts, and the government will have to be very careful as to what their next steps will be as well. But yes, all eyes will be on Governor Das.
All right, that was our Bloomberg South Asia economy editor, Ruchi Bhatia, there joining us from Delhi. And you can, of course, turn to your Bloomberg for more on that RBI decision that's due in just under 2 hours' time from now. I go to TLive Go to get commentary and analysis from Bloomberg's expert editors. We'll have plenty more ahead. This is Bloomberg.
Welcome back. You're watching The China Show. We're tracking this crisis in France where President Emmanuel Macron says that he plans to stay in office for the remainder of his term. Now, he's also seeking to quickly stem this political turmoil after Marine Le Pen's far-right party allied with leftist lawmakers to topple his government.
C'est pourquoi je nommerai dans les prochains jours un Premier ministre.
This is why I will appoint a new prime minister in the coming days. I will ask them to form a government for the general interest, representing every political force within the spectrum of parties destined to govern, and that they could join or at least agree not to bring it down. The Prime Minister will consult and form a more effective government at your service. Its priority will be the budget.
Now, as far as where this sort of spread is over bonds, this measure of bond risk, or the premium, if you will, actually fell a little bit from the peak, as you can see. Just focus on the right side of the graph here, on really hopes that lawmakers will strike a deal on next year's budget sooner rather than later. Now, Marine Le Pen, the far-right leader, told us exclusively that a budget can be passed in a matter of weeks if the next prime minister is willing to narrow the deficit more slowly.
To ask him to resign would mean to disturb our institutions. Once again, it's his decision. Now, if there is a political crisis, an institutional crisis, and if he can no longer dissolve the assembly, if reshuffle serves no purpose, then the French constitution only leaves one other option, which is his resignation. But that wouldn't be a drama either. There would be new presidential elections. General de Gaulle, you know, designed our institutions, and they are very solid. They are extremely solid. Everything's done to make sure that the life of the nation can carry on and not create disturbances that can't be dealt with. If he were to resign now, there would be new presidential elections and new legislative elections.
But are you worried about these crises then leading to severe market reactions?
No, because the reality is that what worries the markets is the economic situation in France. What worries the markets is the lack of perspective concerning reducing deficits. It's the absence of savings at the state level, the increase of taxation on companies that worries the markets. And in fact, you've seen the markets have remained extremely stable over the past few days since the announcement of the no-confidence vote, and even after the no-confidence vote. In reality, they had concerns at the moment of the dissolution in June. But for the moment, whether it's the spread between France and Germany, the rates, or the markets, but for the moment, whether it's the spread between France and Germany, the rates, or the markets, for the moment, everything is relatively calm. Because once again, they realize that anyway, there has to be at all cost another policy other than that envisaged by Mr. Barnier.
But the market is probably looking at the fact that the ECB is standing close and that there's a want from France of getting the deficit down pretty quickly.
Well, yes, but once again, there's a long way to go between wishes and reality. Mr. Barnier wanted to reduce the deficits. He's increased them by 12 billion. You see what I mean? So, once again, using a hammer to bash French people over the heads with taxes, when we're the country with the highest rate of taxation in Europe, is not the solution. But it's the only solution that French leaders have implemented for years. It doesn't work. Look at the situation we find ourselves in. So help companies, enable them to do business, reduce production tax, reduce the cost of energy, or at least reduce it to the same level as the cost of production in France. Those are things that will allow companies to develop and thus create employment.
Voilà, ça, ce sont des lignes qui vont permettre aux entreprises de se développer et donc de créer de l'emploi.
But Madame Le Pen, I mean, first of all, the Barnier actually proposal means that GDP would be the deficit of GDP would be 5% in 2025 compared to 6% this year. So it's going down.
Non, il augmentait de 12 milliards le déficit.
No, the deficit rose by 12 billion. The deficit rose by 12 billion. But you know, the head of Safran, which is a major company, has just given an interview. And what did the head of Safran say? He said Barnier's budget is a bad budget. So, in reality, the fact that it's last year's budget that's applied, however unfair it was socially, is actually rather good news for companies. There are a certain number of entrepreneurs in economic circles who are in fact pleased about the no-confidence motion because they consider Mr. Barnier's budget was worse than last year's budget, and that's saying something.
That's the French National Rally leader Marine Le Pen speaking exclusively with Bloomberg's Francine Lacroix in Paris. And of course, those issues in French politics still ongoing, but certainly we're keeping a very close watch closer to home. What's happening in Korea here, because we've had the ruling party meeting this hour and we're already getting some lines that are dropping from this. One of those is coming from Ahn Cheol-soo. He is a member of the ruling party, the PPP, and he's saying that he would favour a Yoon resignation if rather a Yoon impeachment if there is no resignation. Just to note as well, Ahn is someone who actually intended to run against Yoon in the last presidential race back in 2022, but he dropped out of that at that point. But still, someone who appears possibly to have been in that meeting of the ruling party this hour. And again, Ahn saying that he'd favour Yoon impeachment if he doesn't step away from the position.
Which is interesting, and the complexity that markets are faced with as we speak, because those are, I guess, in some ways non-mutually exclusive outcomes. Everything from a suspension has been floated, a resignation from the president himself, being cast out from the party but remaining in office, and an impeachment, of course, from the position itself. So it's a very fluid situation. The other thing I'd mention, too, on markets is as we hit lows of the day on the currency markets, and as you can see, we're now weaker on the currency today. There's a note which has come through out of SEB, and Eugenia Victorino, the bank's head of strategy in Singapore, actually now thinks all stars are lining up for the Korean won to possibly hit, I believe, was the record low of 1,500 back in 2009. So won bearishness to persist with eyes on 1,500 per dollar. That's a note just coming through right now here, Bill.
Yeah, and actually in this whole episode, the weakest that it's hit is 1444, so it's a bit more to go on that point. But to note, it does seem like there's been quite a big sentiment shift in the PPP, because we also heard from the leader of that party, Han, earlier today, and he's saying that he does have some credible information or evidence that Yoon ordered the arrest of key politicians on the night that he declared martial law. So definitely something to be tracking very closely, because he's a key ally of South Korea's leader, and now he also wants him gone.
Absolutely. Yeah, the key calculation to Bell's point here is, from a party perspective, from the PPP party perspective, what is the best short-term course of action for the party to remain in power up until, of course, the next time, because if they do it now, that might not necessarily mean, that might actually give an opening here to the opposition. Anyway, there's plenty more ahead. We'll keep you guys updated on more of these developments out of Seoul. This is Bloomberg.
Time for a quick look at Chinese domestic media this morning, and Xinhua is releasing the third part of a series of articles on the economy, focusing on the challenges facing businesses. The article cites insufficient domestic demand and the shift from old to new growth drivers. It says those difficulties may mean companies face the need to compete on innovation, while also touting the government's stimulus measures and the party's commitment to support firms. The previous part of the series centered around improving domestic demand.
Yeah, and speaking of stimulating demand here, the Securities Times reports that domestic investment in areas including things like infrastructure and manufacturing will continue to be on the up next year. It says that will help the government meet targets set out at in the 14th five-year plan as it reaches its final year, of course, next year. But the top story across the front pages today, President Xi Jinping and his message to the PLA, where he called for strengthening the military's information support force. Now, Xi told troops that the system has a crucial role in modern warfare and should help support combat readiness. Yeah, there we go. And as we just, a lot of these things that we look at here just to help us get a sense of priorities right now from a policy perspective as markets await for what could come from next week, and really where mind space is right now as far as the economic planners are concerned.
Well, I think it's clear that President Trump wants to maintain and also promote America's competitiveness in a range of different industries. And some of those are kind of obvious. I mean, AI, for one, it's already got that lead in the space. Crypto is very interesting because this is an area where the US has sort of been reluctant to yes, they've got sort of the institutional base, and yes, they've got a lot of the innovation coming from there, but actually to regulate the space, they haven't really wanted to do that just yet. But now we've actually got a sense of just the priority that this is going to be taking in another appointment this morning, because Trump has named David O. Sachs as the White House AI and crypto czar. And this is someone who's a venture capitalist and someone who's going to perhaps give those companies a key conduit into the White House. So that's something else that adds to what we had yesterday, which is the new SEC chair, Paul Atkins, against someone who's pro-crypto, and led into that trading action. We saw crypto hitting 100K. Sort of peel back a little bit, though?
Yeah, and that's something I think we've heard from, I think it was Vivian Kuo, who joined us last week on the show, is where, markets tend to look ahead, in fact, right, on crypto itself, to your point, right, after we hit 100,000 rather, sorry, crypto bulls, don't punish me. Here we go, all the hate out there. We had a pullback earlier on to about 92, we're at 97, 98 right now. And interesting you bring up the point of appointments, because just to pivot back to China, of course, this hour, we now know the U.S. ambassador to China as well. David Perdue. Anyway, just to get that other name out there as well, in terms of the conversations, this fluid situation that's taking place geopolitically. We've talked about France, we've talked about Korea, and now it's almost a reminder for us that, hey, there's a China story that we need to tell. And yeah, David Perdue, senator, of course, I think 2015 to 2021.
Yes, that's right. And then, of course, having quite a storied career in businesses that did have connections or connections to Asia. But we were talking earlier about the opinion piece or the article that was written by him in the Washington Examiner just in September of this year. And, I mean, the title really gives it away. China's new war, America's freedom depends on confronting the threat. So someone who's likened President Xi to a modern-day emperor. He's also saying things like the PRC wants to become the global hegemon by 2049, and that they're sort of striving toward that. But it is that big question. You've been in a unipolar world for so long, that US dominance has been there. Are we shifting to a multipolar world now? And how is the US going to be pushing back on that? And I think that its focus on, again, retaining or promoting those key industries, those key growth drivers, speaks to that play.
It's a headache for China's trading partners to dual circulation. And which side of the fence do you align with if it is a multipolar world? Let me end the show here by just mentioning that we are near highs of the day on the Hang Seng Index. There's been a turn in the last couple of minutes or so. This turn towards risk. Equities up, the currency stronger, bonds are lower. That's it from us here on the China Show. Have a great weekend ahead. We'll see you all on Monday.